Now that the stock market has gone down and is starting to come back up, I'm going to give you 9 tips of what experts say to do. I'm Robert Reardon, and this is my voice. I'm a certified public accountant with 30 years experience helping clients with these types of problems. When the stock market goes down, I'm just trying to help. A lot of experts say that the market's going to go in a straight line. In other words, it's not going to go up much. I've been doing a lot of research from experts and I'm going to lay it out for you. These are proven strategies that have worked over 75 years. We had a long bull run, now it's time for a bear. A bear market can be classified as when investments value fall below 20% of the year. That's what happens with the virus in 19 of 2020. I know that you don't want this to happen. The market's going to go up and down. It's going to make you upset, but a person cannot time the market. You've heard it before that you need to stick with it. It will gain back over much of the time that you lost. Are you in your 20s or 30s or in your 60s? It could take a year or 3 years. You got to be diversified. There's a couple of ways to work with the stock market during these bear years. The first strategy is timing. You could say it's when a person stays out in the market. They're trying to pick the right time to get back into the market to buy. There's too many risks that could go wrong. The other strategy is to buy low and sell high. The problem with this is how you're going to know what time it is to do it. Again, there's a lot of risk. The risk on the value of the stock is determined by several factors. You got to judge the stock by the company's management, the products, and other company factors. Then you got external factors like war, if something's going on, bad economy, interest rates high, and unemployment. Look at it: food, healthcare, recycle, and waste as possible industries to invest in. In a down market, these type industries are recession-proof. People need to eat, and they also need to dispose of waste. If it was me, I would not get no wise ideas to invest in hot dogs and hamburger companies. These kind of companies are the last things that I got on my mind. The best overall strategy is long-term and maintaining a balance of stocks, bonds, money market securities, and alternative investments. The key is to buy stocks with long-term performance history and sufficient reserves to ride out a bull market. You can buy treasury bonds where you live in the state's obligations where government is sure to sell off assets or raise taxes to pay off the debt. You can buy stable stocks that may not be able to make you enough money or cash initially, but will raise cash gradually. As a CPA, I've gone through this with a lot of my clients several times. In 2009, the financial crisis, everybody was doom and gloom. I had to keep telling clients to keep sticking to a plan because these things will get better. If you do have enough money, you could refinance your mortgage or pay the credit cards down. When the interest rate is low, is not a better time to do it. You try to simplify your investments to get the most benefits. Selecting a financial plan that gives you a roadmap to success. Selecting an investment advisor in your next step, and if you're not going to do it yourself. Pick a person that has references with a lot of experience. Try to be wary of someone that's saying they are making a lot of money on certain stocks. A lot of times it does not work out. I heard a story of a doctor back in 1919 having a hard time deciding between a buggy whip for a horse or buying Coca-Cola stock when it just started coming out. He bought the stock in the buggy whip because he said it was more practical then. Try to do things like buying whole stocks because they will rise again, but the question is when it's going to happen. I think you got to have a mindset of only spending money that you have and not what you do not have. Always look at your stocks and adjusting them, getting rid of the bad ones and keeping the good ones. It's always good to establish an emergency fund against if something comes up and you have to pay the bills for 3 or 6 months with no other income. Again, with lower interest rate, it's a great time to lower your house payment if you can afford it. I have cash on hand up to 10% for the emergency fund. You can put 20% of your portfolio in corporate bonds of companies that do well, that have the money to pay off the debt, and a down economy that gives you a rate of return of 2 to 3%. I learned last time when the Great Recession hit in 2018 that being involved in a lot of several stocks was not always a good idea. Investing in mutual funds and ETF could save a lot of pain because they have a lot of stocks invested in and it's diversified. Large cap stocks with great financial history is great for dividends if they're still paying. You might consider buying some stocks or mutual funds involved in gold and silver. These commodities increase in price when there's a recession. A lot of people cannot accept when the market dips. I knew that person that got so upset about the drop in 2008 he tried to take his life. You got to know your risk tolerance. The stock market today and stock news can be found all over the place. Systematic investing can be cheaper because stocks are spreading out when the market is moving on, the value is high or low. Try to allocate your nest egg into different pots of money. You know, my grandfather learned from the Great Depression of 1930 not to trust stocks. He lost so much money that he never invested in stocks again. His big investment was CDs. Just staying in the bank and getting interest. Some of the good CDs are Citibank and JP Morgan. You can get banknotes from Lloyd's, Citibank, Morgan Stanley, and Goldman Sachs. REITs and other investments such as healthcare trusts and hospitality investors is good. At this point in April of 2020, quality stocks are being unfairly devalued. Defensive or non-cyclical do not follow like normal stocks. I'm saying they do not follow the economic state that we're in. Do me a favor and not invest in stocks that invest in swamps in South Carolina. Again, there's stocks for necessities like food, gas, and medicine. People do not think when the economy goes south then they miss out on the recovery. A little joke to help add humor to the video. The worst kind of accountant is one that's shy and retiring type. His ledgers are a few million shy, which is why he's retiring. The market has changed from 2010. People's retirement plans had gone up a great deal. I'm going to give you strategies that can help you. These are ideas from people who know what's going on. They will give you ideas in investing in stocks, investment apps, invest in real estate, or invest in 101. You need to mark out and avoid ideas that will kill your portfolio. When is the stock market going to come down or go up? We never can tell. If you got a lot in the stock market, then diversify into bonds, mutual funds, index funds, and balance funds. Try to simplify your investments to get the most benefits. Selecting a good financial plan that gives you a roadmap to where you need to go. Selecting an investment advisor is your next step if you're going to use one. If you're not going to do it yourself, pick a person who has references and a lot of experience. The high-yielding savings accounts are starting to give more interest this year. The interest rate is gradually rising. I know you're going to say, but it's not stable. How about buying stocks? I'm not talking about penny stocks, but blue chip stocks. A lot of individual stocks have been rising until we hit this bump in April of 2020. Some of the stocks have been given a great yield and dividends. Investing in stocks should be planned out and even practiced to know what you're doing. As to a reference of the last sentence, you could practice it by picking some hypothetical stocks and see how well you're doing without putting money into them. U.S. saving bonds give great interest, which is adjusted for inflation. It is backed by the government to be paid if default. Another great place to invest and trade. Corporate bonds if the company has the ability to pay them back with no problem. It is basically the debt of the company. Check the financial records of the company to make sure that they have a good financial footing. If they can pay the debt back, then you're pretty good, you can buy them. How about investing in mutual funds? Target funds might be the best investments because they are mutual funds that have different stocks with a goal for the target date when you cash it in. Another idea what you know about is the 401k that are invested in stocks that are mixed with bonds and cash to diversify. Again, they might have stocks that are paying dividends. Mutual funds, if invested in the right stocks in S&P, which has a less administrative cost, can give you the right diversification. Mutual funds is considered the best way to invest. The reason is because they have a lot of stocks. It's diversified in the blue chip and other types of stocks, which help it to give you a better overall return. Mutual funds are pooled investments. It is because the money is professionally managed and sometimes at a reasonable cost. These funds offer statements, experienced managers, and tax statements to help you. Mutual funds, of course, charge management fees, so you've got to watch out that they're not being taken to the cleaners. Some funds even charge a fee like a commission. These commissions are called front-end load or back-end load. The best of the funds, in my way of thinking, is in an index fund. This is a portfolio of stocks that replicate a major market index. This is the best thing because you don't have to invest in all individual stocks. You can just invest in one thing. They do not have a lot of people managing the fund. Some people say that you can manage cheaper stocks better. Of course, you can accumulate more of the stocks and then they take off and you'll make more money. This gives you more of a profit. Cheap stocks have some bad points. They're not easily managed and you don't have enough information on to make judgments sometimes. They can be volatile and go up and down in price quickly. You have to watch what you're buying. Look for companies and brokers that have a good past and not shooting a lot of lies. Again, make sure you don't have a lot of fees. And do a lot of research to just see why certain stocks are so low in price. Have they been at that price for a while, or are these stocks out of favor with people? The last of these is penny stocks. You got to have a lot of information on this to buy them. They're real cheap. They could rise in price, but they're a lot more risky. Some people like to do this a lot. You can, of course, get these stocks at a cheap price, but a lot of risk. You're investing in small companies and trying to find out which one will grow. Some of these companies expand quickly, and that's when you're going to make some money. There's real estate, a long process. You can buy real estate with a mortgage and hope it grows in value. And if you're getting rent on a particular piece of real estate, you get some money each month a little bit. Appreciation helps in value, increasing your wealth. And again, if you're getting rent, then more than the mortgage payment, you can put a little away each month. It's more stable than stocks because you got the asset of the house. I tried to explain to you what I think would be good to invest in 2020, even before or after we got hit in April. There's a lot of ways to do this, and it should get better during the year. You should try things that make you comfortable. I would suggest you be conservative and increase your wealth a little bit at a time. These ideas are in stone and have been given from experts for years. So which of the ideas I've explained to you are you going to use? Are you going to buy blue chip stocks? Invest in defensive stocks when the recession hit? Buy in gold and silver? Please comment below what you're going to do. Do you have any other suggestions that you might comment below? If you like this channel, how about say like it below? I've got some great videos coming up in the next weeks that you might be interested in personal finance and investing. Please subscribe to my channel.